Welcome back, everybody, for my portfolio update for July 2024. And what you're going to see is that July was actually a respectable month, but we're not in July anymore.
I have a feeling we're not in Kansas anymore.
And over the first couple of days in August, my portfolio battleship is taking on some water, along with the broader market. So we'll talk about July, but also the first couple of days in August since, well, they're already done. And this video is actually as of August 4th, which is a little later than normal, but I also have some buys and sells to share. Now, the market in July was up a little over 1% and ended July above 15% for the year, but currently sitting quite a bit below that after the first couple days in August. And it's been an up and down earnings season with, again, big swings for stocks like Shake Shack, which was up almost 19% in a day, and Amazon, which was down almost 9% after posting decent numbers, but below market expectations. So where did I actually end up for the month? Well, let's find out. Now again, this video is as of August 4th, and my account is at $283,709.82. And in the last 1 month, my portfolio balance is down over 4.5% and $13,000. Ouch. Now what we're going to see is those were mostly the first 2 days in August, but still not fun. So if we take a look at the actual breakdown, and if we adjust this to see how we did for July only, we see that my beginning value was $291,190 and some change, and I made $1,600 in net contributions. Now, in terms of my overall investment change, it was $2,124.65, which was mostly investment gains of $2,124.46, as well as a whopping 19 cents in dividends and account interest. So after a couple of really good months, July was the beginning of a slowdown for my portfolio and the broader market overall. But let's see how I did against the S&P 500. So as you can see for the month, the S&P 500 was up 1.22%, accounting for the timing of my contributions, and my portfolio was up 0.72%. So we trailed the S&P 500 for the month by exactly half a percentage point. And if we take a quick look at year-to-date performance for 2024, which includes the first couple of days of August, the S&P 500 is up 12.99%, and my portfolio is at 8.87%. So we're trailing by just over 4 percentage points of the index for the year. And just for consistency, let's take a look at the performance of my portfolio since I started it on December 8th, 2022. And if we remove the annualized returns, we see that my portfolio was up 27.30% compared to the S&P 500's 39.42%. So since inception, I'm trailing the S&P 500 by about 12 percentage points. Now, each month when I post these videos, I usually get at least one question in the comments that is, you're still trailing the index. Why don't you just buy the S&P 500 and call it a day? There's two ways to answer that question. One is I enjoy picking stocks. That's the whole reason why I do it. And we have other accounts that are just S&P 500 index, like my wife's retirement account. And that's always been the case. And the second way to answer that question is we're still early. Like beating the index isn't something that you should expect on a month-to-month basis, right? It's something that hopefully over time you can do. And especially with the way that I started, the first 8 months or so of this portfolio, I wasn't even sharing it on the channel. And I didn't even really have a strategy. And I was just trying to figure out how I was going to approach it. So since that time, I think we've done significantly better. And I think over time, it's going to continue to get better and eventually be able to beat that market index. But of course, for now, we're still trailing the index by quite a bit, and we'll just see how it progresses over time. Now, if we take a look at my investment income, specifically for the next 12 months, we see that my annual dividends and interest are down to $1,955.08 compared to the $2,658 that I had in June, which is a decrease of $703 from last month. And that's because the 2 sell transactions that I made recently were from a couple of my main dividend payers, which we're going to get into. Now, in terms of the overall dividend yield for my portfolio, it dropped to, I think, an all-time low of 0.69%. But again, even though I share this number each month, it doesn't really mean a lot right now because I'm not using the dividend income. Like if I needed income now, then I would refocus my strategy on companies that had higher yields. But because I'm focused on more of a long-term total return, this is really just a vanity number at this point. But let's go ahead and take a look at what dividends actually hit my account this month. And as you might have guessed, there were none because I have no stocks that pay dividends in July. So that was quick, but let's go ahead and look at what I bought and sold for the month. On July 11th, I bought 2.8284 shares of Lululemon at $290.97 a share. And also on July 11th, I bought 1 share of Visa at $261.50 a share. On July 26th, I bought 1.7266 shares of Meta at $463.32 a share. And then on July 31st, I sold 150 shares of Valero at $166.11 a share. Then on August 1st, I bought 35 shares of Meta at $498.55 a share. I also bought 12 shares of Lululemon at $248.40 a share. And then on August 2nd, I bought 26 shares of Amazon at $169.20 a share. And then lastly, also on August 2nd, I sold 25 shares of McDonald's at $274.31 a share. So quite a bit of activity there towards the end of the month and beginning of August. And that's because I was planning to get out of Valero once it ran up a little bit again, like we talked about in my previous video. And then I had stocks that I liked starting to go down and looking attractive to me. Now with Meta, I'd planned to increase my allocation all along, and after I sold Valero, it seemed like a good opportunity. I was actually planning to buy right before their earnings, but decided to wait just to see what would happen, and of course, they shot up, and then 2 days later, the market tanked. So that was a case where I should have followed my own advice and just ignored the fact that they were reporting earnings, and I would have been able to add it at a cheaper price. But at the end of the day, I'm not worried about Meta at all. And we talked about me trimming McDonald's in that previous video as well, and this is simply me recognizing that McDonald's does have some legitimate headwinds that they need to figure out, and I just didn't want that high of an allocation to it, especially when other companies that I think are really attractive are starting to come down. So we'll see what I end up doing with that extra cash. We'll see what happens over the next couple days. So with those updates, let's take a look at my portfolio allocation and weightings. Nvidia is still number one at over 15%, Amazon is still second at over 13%, Apple is third at over 12%, Visa's next at 11.5%, and McDonald's is now down slightly after trimming to just under 10%. And those 5 companies still make up over 60% of my portfolio. Now next is Meta with a big jump up to over 9%, Amex is next at over 8%, Google is just over 6%, Caterpillar now at 4.4%, MSCI is right at 4%, and Lululemon at 3.73%. And actually, right now, cash is at almost 2.5%. And if we take a look at which holdings have performed the best overall, and remember, this is only price return since I take my dividends in cash and reinvest them manually. American Express is still in the top spot at over 52% gain. Valero's gone now, but I ended up at over 40% on that one, not including dividends, so it turned out to be a good buy overall. But next is CAT at just under 30%. Nvidia has come down a bunch, but still up almost 25%. Apple has rebounded nicely and now up almost 18%. Google has come down a bunch, but still up 16.5%. Visa is at just under 9%. Amazon has come down a lot and just under 3% now, but it means I'm likely going to be adding to that position in the near future. Now, Meta is up just 1.4%, but that's mostly because I just added a bunch at current prices. My original buy was up around 10% or so at this point. McDonald's has had a nice little comeback, going from down 5% last month to back in the green in just under 1%. MSCI even more so. They were down 10% in the red last month and now just in the green. But that's been a nice little bounce back for the stock. And lastly, my low negative holding is Lululemon, and it's down 27% and still dropping. Now, if we take a look at just the last month, you can see that as of August 4th, I only had 2 positive holdings for the month, but they were both up big. McDonald's up over 11.5% and MSCI up almost 10%. Apple was just negative for the month. Visa was down a little over 0.5%. Amex was down over 1.5%. CAT was down over 2%. Meta was down over 4%. Valero, which I sold, was down almost 6%. Google was down over 10%. Nvidia down over 12.5%. Amazon down over 16%, and Lululemon down almost 22%. So yeah, obviously this was a month where a lot of the high valuation, high growth names came down quite a bit, which we talked about in my last couple of videos. So let's take a look at my top 4 for 2024 stocks. Now, as we can see, only one of my top 4 for 2024 is still outperforming the index, and that's Valero, the same as last month. But it's also the one that I just sold. And if you look at the rest, they're now pretty comfortably behind the index year to date. Now, Hershey has had a nice little comeback over the past month, though, because they were actually negative for the year as of a month ago. But of course, as you all know, I sold Hershey in February, so let's take a quick look at how it's done before and after I sold. Now beforehand, it trailed the S&P by just a bit, and as you can see, it's made up some ground over the past month to now just be trailing the index by about 6 percentage points. So while it's still trailing, it's had a nice little bounce back, and we'll just see if it continues. Alright, so let's take a look ahead to next month and what holdings I think I'm going to add to going forward. Now in terms of ones I'd like a higher allocation to, really there's nothing here that stands out to me anymore now that I've increased my Meta position. That was one that I really wanted higher, and I did that. In terms of ones I think are the best value right now, definitely Amazon, Meta, and Lululemon, and dare I say Nvidia is starting to look interesting again. And I know their earnings call at the end of August is just going to be crazy in terms of anticipation and market reaction. But let's take a look at what I expect over the next month. Now obviously I'm going to be looking for more good opportunities as prices are coming down. I'm also going to look into more small and mid-cap companies because my portfolio was already mega-cap heavy. But since I cut Valero and then added more to my Amazon and Meta positions, it's even more mega cap heavy. So even though I really love those companies and I think they're going to do well over time, I would like to have something a little earlier in its business life cycle just to balance it out. And part of that could be adding to my Lulu position since they're sitting at around a $30 billion in market cap, but we'll just have to see. Now, I've been talking about doing a better job at how I monitor my stocks and documenting them, and I've been working on that, so I'll probably have something to share over the next month or so. Nothing major, just a tweak to an old idea. Now, one thing I did want to share with you guys is a quick update to my experiment of evaluating Fidelity versus Schwab. And just to caveat this is something I'm going to spend a lot of time on. It's not going to be a quick decision, and it may be months before I even decide what I'm going to do. I've opened a brokerage account with Fidelity as well as an HSA, since I can have multiple HSAs at different places. So based on first impressions, I really want to love Fidelity because the things that I don't like about Schwab are things that I think Fidelity does really well. Their automatic cash sweep stuff is awesome. Their mobile app, in my opinion, is better, cleaner, and more useful than Schwab's. And I really like their watch list functionality. Like the news and articles, especially in the app, just look better to me. I don't really use this functionality at Schwab at all, even though it's kind of there because it just doesn't look very polished, and at Fidelity it does. And over the last couple of weeks, I've actually had to reach out to Fidelity customer service just to ask some questions about my weird account types or how certain functionality works, and they've been really good. In my opinion, Schwab has really good customer service too. It's one of the things that I like best about them, but it was nice to see that Fidelity customer service was good as well. Okay, but the biggest downside that I found with Fidelity so far is that their portfolio tools just aren't as good as Schwab's, especially as it relates to being able to see performance and stats across multiple accounts. And let me explain what I mean. So Fidelity has the ability to see basic things across account types. You have return, you have investment income, and you can match it up against a benchmark, which is nice. But it looks like combined you can only get a time-weighted rate of return instead of a money-weighted rate of return. So money-weighted is similar to what I see at Schwab, where it takes into account the timing of my contributions, where time-weighted doesn't do that. Now, at Fidelity, I can see the money weighted by each account, but not together. And maybe that changes once I get some data in here after my account's a little bit older, but it doesn't look like it. And even then, on investment income, it gives you a graph to see past dividends, which is nice, and a trailing average. But if you want to see projected income going forward, you have to go to positions and dividend view, and at the bottom, you can see a grand total estimated annual income. So again, not quite as elegant of a solution that Schwab has, but it can work. A couple of the other challenges I ran into, though, were just trying to find the total weight of a holding in my portfolio. Like, all I found is a way to see what percent of the account a holding is, but not a way to see the weight against the full portfolio. And even trying to find overall performance data, again, it's by account only and not the total performance of my holding across all accounts that hold it. And now look, I realize that this situation is very specific to me because I have all these different account types and I'm managing them all together, wanting to see the performance as if it was one account. But the challenge I'm having is that Schwab is already doing this for me right now, and it's the stuff that I use to share and show my portfolio in these monthly videos. So we'll see what else I find at Fidelity, and maybe I'm not using all the tools that are available to me, but right now if I moved over, I would have to basically change how I track and show my portfolio, and I don't know if I'm ready to do that yet. But I will say one issue that I ran across this week was Schwab was actually down on Monday morning when all the market volatility was happening. I couldn't log into it at all, which was very annoying. I was able to log into my Fidelity account though, so that's definitely a plus on their side. And this wasn't a first-time issue with Schwab either, so hopefully that's something that they get fixed going forward. But either way, I'm going to take my time on this, and if you have any tips or insights about how I can track my portfolio on Fidelity, definitely let me know. But before we close up the month, like we always do, let's review my portfolio goal and strategy. My goal is to beat the S&P 500 in total return while creating a growing passive income stream for my family. My strategy to achieve it, I want to attach myself to companies with wide moats that are generating increasing cash flow and rewarding shareholders with dividend growth that outpaces inflation or share buybacks that increase their ownership stake in the business. And so if I recap what happened this month, the portfolio was up under 1% and trailed the S&P 500 by exactly half a percentage point. Annual dividends decreased dramatically with the sale of Valero, and only one of my top 4 picks for 2024 is still outpacing the market, with the others still trailing behind. And when you look at those things at a high level, you might say, wow, it looks like it was a bad month, but I look at it like this. I added to Amazon, Lulu, and then Meta significantly. And if you remember, those were the 3 holdings that I said looked the most attractive last month. So at the end of the day, I'm working my plan, looking at which companies look the most attractive with my price to cash flow to growth criteria, and we'll see how they end up over time. Everything's going to be a process. It's not always going to look smooth or go up in a straight line. Ups and downs are simply going to be part of it, and we just need to see the downs as opportunities to build up the positions that fit our strategy best. So how did you all end up for the past month? Let me know down in the comments below. Now, if you missed my video on how I use price to cash flow to growth to value companies, you can watch that by clicking this video right here. Hope you guys have a great day out there. Financial independence is true freedom, so keep building and stacking wins, and I'll see you on the next one. Peace.